Hello. This is Jonathan, and you're listening to the Johnny Talks podcast, the place where we help you achieve your financial goals. Hola, amigos. Hope you're having a great day wherever you are. And if you're a new listener to the show, special warm welcome to you. I really appreciate you tuning into the show. And if you're a returning listener, welcome back. I appreciate it even more. In today's episode, we will speak to my friend Tanel Orro. He's the CEO of the company Reinvest24. Reinvest24 is an Estonian real estate crowdfunding platform that has been on the market for a bit over 2 years. And it's true, peer-to-peer lending platforms and real estate crowdfunding platforms have grown popular in recent years, especially here in Europe. These offer easy ways to invest your hard-earned cash, and they offer decent returns and even pretty high ones. So, what's not to like about them, actually? Shouldn't we all invest in them? Well, it's not all that rosy, as the high-in-demand markets also attract fraudulent players. And this is actually what we will discuss today on the show with Tanel, and he will guide us through what to look for before investing our money, so we are sure we are not being scammed. This episode is for you if you want to take a closer look at peer-to-peer lending platforms or real estate crowdfunding platforms and want to know how to perform your due diligence before taking the plunge. So without further ado, let's hear the interview. Hello, Tanel. How are you doing today?
Hello, I'm doing fine. It's a nice sunny day in Tallinn.
Tallinn. Where's that, Tanel?
It's Estonia. It's the capital of Estonia, one of the Baltic states.
Yes. Okay. So calling Tallinn. Excellent. And Tanel, look, I invited you here on the show today. I'm very glad to speak to you because we will talk about your company, Reinvest24, which is a real estate crowdfunding platform, but as well, we will talk in general about peer-to-peer platforms and real estate crowdfunding platforms, because I think it's quite a hot topic lately. And I myself have been started to invest in those platforms. I know a few of my Twitter friends, and I get also questions from a few listeners about all those platforms, and they are wondering which platforms should I use, what should I look for before investing. Is this platform good or not? And of course, you represent Reinvest24, but I would like to bring a bit more general so that we can help the listeners see if it is something for them, and if they feel investing in peer-to-peer platforms or real estate crowdfunding platforms is something for them, then what to look for. I think that's a first good one, and then we can talk a bit further. So Tanel, it was a mouthful here, but so can you tell maybe just a little bit about yourself before we get started?
Yeah. So my name is Tanel Orro. I'm the CEO of Reinvest24. It's a real estate crowdfunding platform. We're operating from Estonia, Tallinn. Most of our projects currently are located in Estonia. We launched our first project in Latvia this month, and it was the fastest funded project on the platform so far. We've been operating since 2018 May, so about 2 years. It was our second anniversary this month, and we try to minimize the risks as much as possible, and we have created an instrument that holds we believe the smallest risk and is sustainable throughout market cycles. So even in the downturn times like right now, our investors and our projects are not affected that much.
Okay, that's good to hear. Is that linked because your platform is mostly about real estate? Is that linked to your platform or to the market itself in Estonia?
No, it's rather the instrument where you invest. I mean, real estate crowdfunding can mean a lot of different things. It's not all the same. If you're investing in some real estate crowdfunding platform, most of them are offering you loans. So you're actually investing into the companies that are developing the properties. You're not actually investing into straight to the real estate itself.
Yeah.
We are focusing on rental real estate. Our goal is to purchase the property and operate it through a separate SPV and pay out monthly rental incomes to our investors who are participating.
Yeah, so it's a recurring cash flow for the investor. So if I translate it a little bit, I have a small amount of money or a big amount of money. I put it into your platform and I should get a monthly return in form of a cash flow because it's a rented property.
That is correct, yes. Rental real estate is one of the lowest risk investments. It's also one of the most popular one, but the entry barrier to get started is quite high.
Yeah, exactly.
To actually purchase the property for yourself, and you also need some market knowledge. You also need to take care of the property. So it's not fully passive as many think, especially depending on how big the operation is. If you just own one apartment that you rent out to long term to someone, then most likely it can be pretty much passive. But sometimes some unexpected errors can happen also, like the tenant doesn't pay, or you need to fix something, and so on. So our goal is to to lower the entry barriers for investors, that they can participate with just small amounts, starting from €100 that they usually use to save on their bank account or just in the savings account, and they can enter. They can also diversify. They can invest in different. Our goal is to offer different geolocations and different type of properties as well, and we take care of all the work, so it's fully passive.
Okay, that's good. And then, I've seen a few of those platforms across Europe, at least. Like there's one in Spain called Housers. I mean, there's you. I think there's other company like in Baltic countries. And I was wondering then, do those companies like yourself, do you own those properties, or how does that work? Do you own a real estate empire and then you just rent them out and redistribute parts of the rental income to your investors?
Yes, we create a separate company for each property. This property will be buying the property and will stay operating it. This will be the single purpose of this company.
Okay.
All the income that it makes, that company has obligation to pay out all the profits that it makes monthly back to the platform, where the funds will be distributed between the investors.
Okay, so that's how it works. Okay. You were mentioning it earlier, but it's important when investing in real estate, or actually any type of assets, to know what you're buying with the right understanding. So, for example, for the Spanish market, I can speak because I did tons of research on that. I mean, I'm Belgian, so many people are interested in the Spanish market to buy properties, for their holidays or for their later years. So it's natural, and I've done a tons of research. Now, as an investor, and where I can remove my emotions, Estonia or the Baltics in Europe may seem attractive. But okay, I know a bit of Estonia. I've been there. Nice country. But the real estate market, I don't know anything about. So why should I, for example, go to your platform or any other platforms in a country I'm not familiar with, for example?
Well, yeah, that's one of the purposes of us as well. We have a big real estate team that's been working on the market since 2005. So we will be the ones doing all the research and all the due diligence, and we will give you the best insights that we can give you regarding to all the properties, what risk they come to, what risk they hold, and what's our strategy with the property. I'm also doing some webinars, giving an overviews about overall market situation here in Baltics and in Tallinn specifically. We're actually planning to have a webinar on 11th of June, also about what's the current trends on the market and what to expect in the near future.
And how does it look actually in Estonia right now? I mean, the real estate market, okay, we're in the middle of the pandemic, but let's take that out for a minute. How does that look just in general? Is it booming or not? I know the economy is doing well, but how is it with the real estate market? Can we expect large capital gains here with regards to real estate?
Well, if we look at the very short-term period, then the corrections can occur in the market. Of course, on the current pandemic situation, the consumers and the bank's confidence has definitely dropped. But I see that it's recovering quite a lot already, since the pandemic didn't really hit as hard as some of the experts were talking about it. But in overall, I would say that. It depends a lot on the property type as well. Some sectors are getting hit a lot harder. For example, the Airbnb apartments, the short-term rentals. Obviously, the borders are closed and there is not much demand for them at the moment. in the 2019 in Tallinn, the short-term rental apartments, the offering increased from 1,500 to 2,500.
Oh, wow.
It was a booming trend, really. There were many service providers that would take care of your property, rent it out, clean it, and so on. So you can stay totally passive. You pay like 25-30% of the revenue for them. And you can actually get quite good yield from your apartments. And it's really a passive for you. So this trend was really growing, and I really felt that it's booming on the market. That's why we also exited one of our short-term rental apartments at the end of the high season in 2019 September. So this sector is definitely getting a large hit, and it's putting a lot of pressure currently on the long-term rental market as well, as no one wants their apartments or properties to stay empty.
Exactly.
While there is no short-term income, right? Short-term rental income. Some of them still need to pay their bank loans for them and so on. So they will rent it out rather at cheaper price, but they just want to do it. They just want to get it rented out fast. Usually the terms are like that, it's not very long-term for the tenant that comes. They can like adjust the price in every 6 months, or they put in some terms that are not favoring the tenant much. But still, the pressure is quite big. Also, if the whole summer season, which is considered as the high season where the short-term rental apartments make most of the profits of through the year, if that is cancelled and we don't see any tourists the whole summer period, then most likely some of these apartments will be sold. But at the same time, the banks are currently very friendly with the loan takers who bought those apartments with loans. They offer grace periods to so the owners are not really hurrying to sell them cheap. They rather are looking to rent them long term. But yeah, the living spaces are like getting quite a bigger hit, but it's nothing to compare to 2008, 2009. Currently, the prices have dropped since March, maybe like 3 to 6%.
Okay, in the longer term, it's a small hit.
Yeah, in the longer term, I see that the market could recover from that in just 1 year time. And if we look in like 10-year perspective, then I would say the capital growth average would be around 6% in Italian market.
Okay, wow, that's quite good actually. Okay, I see. And then I was wondering as well, one thing, this is more for you, Tanel, personally, because you chose to found this company Reinvest24, and you chose for the real estate approach. And why not, for example, like other platforms, peer-to-peer platforms, go for a loan originators like Mintos or such platforms? Why did you go for the real estate?
Well, in my honest opinion, the risks should be the priority for the investors, especially like retail investors that don't really do their due diligence on they might have like full knowledge or proper due diligence can be expensive at times. And if they just want to get started, then I would say that the real estate, especially the rental real estate, is one of those instruments where the default doesn't mean that you're going to lose your money that you invested. I mean, the income could stop for some period. If the property is not rented out, the prices can drop at some periods. But if you look at it in like 5-year perspective, then you're not going to lose your capital, even if there is a even bigger crisis than back in 2008. The market will eventually recover from it. But if you invest into the loans, then you need to understand that the yield that is offered to you, it's correlating with the interest rates are correlating with the risks that you're taking. So I mean, if you're chasing after like 20% loans, interest that offer you 20% interest, then you need to understand that it's correlated with the risk level. If these loan takers could, if there weren't those risks, then they could have an access to some cheaper money from the banks, or the banks might not give it because the collateral is bad, or there isn't any of it, or the company is having a bad credit history. There are definitely some risks. And for me, honestly, I mean, if we talk about which platforms are operating correctly and which some scam events have happened in the near past, it's quite easy to make sure that the real estate platform is working properly. Just go to the registries and you will see the collaterals, you will see all the information from there. You don't really need to dig deeper. This will already give you a confirmation about if what kind of risk you're actually taking. But with the loan originators, it's a quite different story. It requires quite big due diligence to really understand where you're investing and what risks are you taking with it. If the loan originator, I mean, if you're investing directly to the loan takers through the loan originators, the loan originator will get their fixed fee. They are not very motivated to do due diligence. If the investment goes to the loan originator who gives out the credits and manage them themselves, then they're more motivated to do deeper due diligence. And I would prefer this type of loans. But then you will need to do some due diligence on the loan originator itself. Is it been in the business for quite some time, or is it a new one? What's their track record, and so on? Who's managing the company? And there are other questions then. But yeah, it's easy to check the real estate, but it's quite hard to check other type of loans.
Yes, I see. And then one important factor, and also what I wanted to ask you today, Tanel, is that those platforms, to me, they're a bit new. Okay, I've been experimenting a bit. And okay, for the Spanish platforms, I'm quite confident. I know the risks. I'm familiar with the market because I did extensive research on that a few months. But for peer-to-peer lending platforms and real estate crowdfunding in general, it's not always easy to know what to look for because it's pretty recent. I mean, the popularity has been quite recent, even though it had existed already for 4 or 5 years. So what should, for example, an investor interested into putting his money in those opportunities look for? What are a few important criteria to look for when wanting to invest in those platforms?
The whole crowdfunding industry in Europe has been growing very rapidly. It's been like pretty much booming the past few years. I would say like 2 years. There are a lot of interest from the investor side, and that brings us a lot of platforms that start to utilize this demand. Of course, it's also attracting some fraudulent players that are seeing that as an opportunity. It's an unregulated market, and if you're working with some loans, then most of the investors don't really do their due diligence on the loan originators. Like I said before, it can be expensive. You will need some knowledge to really understand what to look for. So definitely it will attract some of these fraudulent players, and this kind of like growth, like I said last year in one of the interviews, it's not sustainable. Something needs to happen. I'm actually quite positively. My mindset is quite positive about the recent scam events, because the financial inspection is now starting to regulate the market in Estonia, for example. The investors are really aware of the risks now. They're really more thinking through things, not just looking at the numbers. Because at some point I really felt that investors really don't care what they're investing in, or they don't take the risk seriously enough. They just want to see what they can earn. And the better the yield, and the better the project, and the more they will invest into it. But yeah, I mean, for the loans, like it's not that obvious or easy to say that these criteria will definitely guarantee you that this platform is 100% safe and you will not lose your money on this one, because it's unregulated market. And if the management of the company wants to scam you, then probably it's not going to be that obvious. They're going to think that through. I see that some platforms on the market right now, if they wanted, they could scam you. It's basically up to them because it's unregulated market. There are some activists now that are really like trying to look into the platforms and the loan originators and where the money is actually going and so on. But altogether, it's still quite difficult to say. But with the real estate platforms, like I said before, the registries, go check the registries. It can give you, basically, you can be 100% sure that things are correct if in the registries you're seeing what the platform promises you. So it's quite easy. But we write a blog post about this where we mention all the aspects as well, what to look for, because some of these you can eliminate some of these factors or eliminate the chance of getting scammed by just looking at some of the factors, like platform itself, the technical solutions. I mean, I see a lot of investors that are working in the IT sector. They could just inspect the source code, see if what kind of technical solutions the platform actually use. Because we're talking about fintech companies. Some of the advantages must come from the technical solutions. For example, the Investio, I didn't look it deeply, but the way it looked to me was that they're just using some simple template in the front end. So some white label solution maybe, or it was pretty much stamp.
Yeah, and it's easy to make a platform or any type of website look slick and modern because there's all these templates available on, for example, WordPress or Wix or, all these website platforms. And if you're coming from the fintech, from the technical engineering, software developer, it's even easier to make a very nice and slick platform that looks 100% legit. Yeah, indeed.
Yeah, you might even be able to purchase it for like 10,000, 20,000 at most. Yeah, I mean, WordPress page for if you're planning to have plus 10,000 users, probably not going to work that well for you. But there are some other cheap and easy solutions just to get the platform up and running, and it actually looks Investio platform looked pretty good. I would say I'm pretty sure that most of the people who went there, they thought that this looks pretty awesome. But but if you're a little bit familiar with IT then you can just check the technical solutions that the platform uses. Then again, the loans are harder. Real estate is quite easy to understand. The communication from the platform, if the answers are logical, I mean, things need to make sense for you. Use your common sense in most cases. If they're offering you 5% cashback or some affiliate offers or referral offers that you get 100 euros and 2.5% from the investments, and then there is 3% cashback on top of that, then it doesn't really make sense. And then
how do they make money in the first place?
How did the company actually makes money? They're growing rapidly. This can be understandable in some cases, especially innovative startups. They're in many cases they're looking more into the growth than actual profit, at least in the first years and when the industry is growing very rapidly. But still use your common sense. Think about how is all that funded? How the platform is able to pay up all that? Another thing is you always must check the company as well who's registered. If the registration is in some weird legislation in some island, or many platforms are registered in Estonia because of the very friendly e-business environment, but they're actually been operating in some other places. In some cases, they're registered in the apartment. You can check that. If they actually have a real HQ in the country where they're registered. So some of the things you can look into, and if you feel that it's weird, you should ask, or you can just make your conclusion based on that. It's definitely there is some kind of reason for that, why these things are like that. So this can raise some red flags for you already. Another thing that I see a lot in the past year was the promotion of the buyback guarantee, which for me really didn't make sense at all. I mean, how will that company fulfill that promise? It's only going to be needed if the situation is bad. But is it going to give anything at these kind of situations? When things are going well, then most likely they can overcome some smaller problems when, it's just like one small loan originator defaults or something. But in a bigger picture, the buyback guarantee is as good as the company itself is. And for example, the business loans that are like 20% interest and there is like a buyback guarantee for them, then it doesn't really make sense. Why would, for the buyback guarantee to actually work, the funds should be reserved at the bank account and used when they're needed. But why wouldn't that platform invest those funds into those business loans itself to earn those high interests? Why would the money just sit on the account?
Yeah, exactly. Mm-hmm.
So this is also something that, for Mintos, for example, it might actually work, because if just one loan originator defaults, they're big enough, there is some reserve funds, they might be able to come out from that. But for some smaller platforms that are aggressively marketing their buyback guarantee, it really feels for me more like a marketing trick than anything else.
Mm-hmm. Yeah, absolutely. And then one thing that I really liked as well in this article, I will link it in the show notes. It's quite detailed. I think it's quite helpful. It's just checking the personnel, the management. I mean, do they have LinkedIn profiles? Do they can you easily find them, contact them on Twitter or whatever? I think that's already is it real persons? How quick is the response when you send emails or ask questions?
Yeah, and also like you need to use your common sense here again. If the board member is like in one of the platforms that I'm not sure, and I think it was Investio. The CEO was a 24-year-old guy who had a sports background. Like, what's the chances? What's the chances that this person is going to run a company that has like 20 plus employees and they have like good risk management and everything, taking care of your funds well? What are the chances for that? So you can use your common sense here as well.
Mm-hmm. Yeah, absolutely. Okay, very good. I really like those tips. And then let's go more into Reinvest24.
Yeah.
So now, okay, we are in this strange times. You said to me before the show, actually, you've been quite busy the 2 last months. So what are you working currently right now? And how do you see the expansion of Reinvest24 for the coming years?
So first of all, these uncertain times, they have increased some worries coming from the investors. So the communication, the transparency currently is very, very important. And we're working really hard on that aspect. We've been more active on all channels. I'm actually even like answering questions in Telegram chats myself, just to be closer to the community and keep them more confident about what we're doing.
Yeah. Mm-hmm.
Yeah, and as well, we actually been exiting 3 of our properties in those uncertain times right now. In the time of since March, since the lockdown started. So we've been like able to show that we're actually, while other platforms are having hard times paying even the interests, we're paying back the principal amount together with some capital growth. And even in these times, we've been able to exit with a great premium.
Okay, that's great. Yeah.
Yeah. So these have been like our main focus right now, and also since the crisis always have like the 2 sides. There is downturn, and then there is also the opportunities.
Yes.
So we are very actively looking for opportunities that this crisis are bringing to us. For example, the last property that we published would not be on the table at that price level if there were no crisis. Mm-hmm. So this is one of those opportunities that we got from this crisis. And the platform, of course, needs some improvements as well. I'm not sure if you're familiar, but we've been working hard on the secondary market. So this is also one of those things that I've been like pushing really hard, because this is a very important piece of our concept. We have long-term projects, so there need to be a way for investors to exit when they really need to.
Yeah.
So the secondary market will fulfill that purpose. And we've been working it for quite a while, and it's been quite challenging. So yeah, I'm trying to take as much the manners in my own hand as possible to push it and get it out there as soon as possible.
Mm-hmm. No, that's really good, Tanel, and I really like what you said there, because you really show in these difficult times and the strange times that you are taking proactive steps and proactive communication towards your investors. And I think that's very important, especially in these times, because it doesn't matter if you are dealing with your customers or with your suppliers, or even in a company setting with your employees, because in these times, nothing beats over communication. I mean, you need to reassure, but you also need to explain and to be as transparent as possible. I think this is just a very sound business practice. So, no, very good. I really like to hear that. And I'm also curious to see how things will work with Reinvest24 in the future. And okay, I'm investing myself a little bit. Yeah, for me, I'm confident. I get the monthly email with my dividends. It's small for now, but I see it works. It's working well. Sorry, it's working well. And yeah, we'll see how it goes, and if I increase my position in the future, how the market is, etc. And I will follow my own advice here by doing more research as well as I go along. So yeah, really congratulations. It's really great, Tanel. And then I think we have come at the end of the show, Tanel. So first of all, thank you for sharing all your tips and your knowledge. I really appreciate it. And so let's move to the quick fire questions that we have at each end of the show. So Tanel, what has been your best investment so far?
I must say that it's an investment that I made into myself.
Mm-hmm.
It was back in 2008 when I turned 18. I worked in the summer in a restaurant to save up some money to go to Australia for 6 months. I was there with a working holiday visa.
Mm-hmm.
I was living in Sydney and Melbourne with my friend, and we were working doing door-to-door sales, which was probably one of the hardest works I ever done. At the same time, it teach me a lot about. It opened my eyes a lot, I would say, and I really learned a lot about myself as well during those times. So this was definitely the best investment I could make as a 18-year-old guy.
No, it's very good. And I worked in sales as well. And it's not just about being good at the technique of selling and convincing customers and getting them to buy whatever you propose. It's also about psychology, mirroring, and how to relate to each other. And it's a great skills that also has a trickle effect in your personal life.
Yeah, and I also got to talk in English all day.
Mm-hmm. Mm-hmm.
So it was a great exercise for that as well. And
Absolutely.
It can be quite hard sometimes, and you at those hard times you actually learn quite a lot about yourself as well, how you manage those situations, or like, especially like door-to-door sales. I'm like walking like maybe 10 hours a day, going door by door, and just people don't want to talk to me. It can get quite depressive and hard. But then you will notice the things that you're actually telling to yourself,
mm-hmm.
your self-talk. If you're telling, like, if your mindset is bad and you're telling bad things to you, then nothing good will come to you. But you can turn that around. It's just a decision.
Yeah. Okay. Very good. Excellent lessons for life here at Tanel, and but essential. And the second question is, what is a book that you would recommend to anybody? And it does not need to be about finance or real estate or anything. Just one book.
I must go with Paulo Coelho, Alchemist. Yeah, it really helped me a lot, I would say. It was I was reading in Australia actually. I remember we were camping by the lake, and it really like kind of opened my eyes as well. And wishing is just wishing, or wish are just wish. But if you put your mind, your effort, your energy into it, then it's a whole different thing. And this is the this is how the law of attraction actually works. Not just wishing something, but putting everything you have into it will create that reality for you. And you need to believe it before anyone else believes it.
Mm-hmm. Yeah, this book has been quoted many times on the podcast, so I read it myself, and I was not super enthused about it, but nevertheless, there are some key lessons in there, and those you mentioned are the ones that actually are helpful, and especially I think if you read this as 18 years old, and it really opens perspective, because at some point in the book, I read it last week, so I remember very well, he has nothing. Yeah. And he goes to this shop where he buys, this glassware shop, and then he comes up with new ideas. I will not tell it here, but for the readers to maybe take it or not, to not kill the suspense. But basically, he sees new opportunities, and then he tries to sell glassware, etc., and to combine it with other stuff. So those kind of things I really liked in the book. And as you say, yeah, it's not only about wishing, it's about taking action. Otherwise, it remains a wish or a dream, and you do nothing with it.
Yeah, that's true. You need to be open-minded, and the timing was probably the timing when I read it was really, really good. Probably that's why I get the most out of this book. But yeah, I would recommend to be open-minded and read it, and especially for younger people who are still like searching for their path, it will give you some perspective.
Yeah, absolutely. And then last question, Tanel, what is the best purchase you've made for under €100? Okay,
this is actually a pretty funny story from my childhood. I was working with my uncle in Finland in the summer break. I think I was going to like 6th or 7th grade, painting this sauna. I made like a bit more than €100, but I remember that I spent €100. It was actually my first investment. Yeah, but it was very alternative investment. It was nothing traditional. So I bought virtual game money in one of the online games, which was at that time, I think, the most popular in the world. It was called RuneScape.
Yeah.
And I had quite a lot of capital there. So I was starting to trade. There was a whole like separate ecosystem inside the game. So I was starting to look at different assets inside the game, what trends are growing, where the demand is moving. It's basically on the economical side, or like investing side. Mm-hmm. It gave me a really good lesson in the childhood. And at some point, I actually managed to grow my funds there quite a lot. I was, I believe, at one point, one of the richest players inside the game. And there was like tens of millions of players, if not 100. So it was a pretty good lesson that this €100 gave me. And it was a great lesson again. And probably, I would say, my first investment as well.
Okay, but that's a quite interesting and funny story. Yeah, because video games are bad, and no, you're distracted, and then it's actually sparked something within you. So that's kind of funny.
Yeah. At the time, like my parents didn't really think that it's a good idea that I did, but in long term, I believe that this is where this spark was initiated.
Yeah,
inside me.
Mm-hmm. No, very good, very good. Oh, well, Tanel, thank you for those answers. Really funny and interesting. And Tanel, where can people learn more about you? Are you on social media, or where can they learn more about Reinvest24?
Yeah, so Reinvest24 is quite active in all social media channels: Twitter, Facebook, LinkedIn, even Instagram. We have a Telegram chat. There is a lot of information in our blog. We try to bring a lot of value to all of our users. It's not only about investments on our platform, but investments overall, also about the P2B industry overall. So everyone will find something valuable from our blog, I believe. And of course, you can also email me directly if you have some questions, Tanel at reinvest24.com.
Okay, excellent. So I'll link all the links in the show notes so people can find you easily. So thank you for your time and taking the time to interview you. It's great. And thank you so much. And I wish you a nice day further.
Okay. Thank you, Jonathan. It was great to participate in your podcast and wish you all the best luck.
Yeah, I really appreciate having Tanel coming on the show today because I got many questions from you guys about peer-to-peer lending platforms, etc. So I hope this episode will help you to make the right choices, the right decisions with regards to putting your money into those platforms. So I hope you enjoyed and that you learned something from this episode. And before we close the show, here are the key takeaways for today. Number 1, with Reinvest24, you invest in rental real estate. They own it through a special company, and the rental income is then redistributed to the investors. And if you want to try the platform out for yourself, you're welcome to sign up through the affiliate link in the show notes, and it will give you a €10 bonus. Number 2, the pandemic indeed caused a hit in the real estate market in Estonia and probably in your market as well. But if you take a long-term perspective, the hit will probably be relatively small, at least for Estonia. Number 3, risks should be your priority when investing for retail investors, that is you and me. So do not be blinded by the promises of high yields only. High yield usually mean high risk, so be careful. Number 4, the most important part of this episode, what to look for before investing. Well, there are a number of things. So you can check the company and property registries in case of real estate investing. If you're tech savvy, you can see if the website is a common used design platform, etc. Does the look and feel remind you of another platform? Are there spelling mistakes, etc.? You can also look at the management team. Are they reliable? Do they have LinkedIn profiles? Are they on social media? Do they have a career in sports or any other unrelated background? Be as well wary about the buyback guarantee because it can look like a safety guarantee for your funds, but it can simply be a marketing gimmick. So be careful there as well. And then another one that Tanel pointed out is aggressive marketing practices such as referrals with bonuses and higher yields on already high yields. And it's like they say, if it's too good to be true, well, maybe it's not. Anyway, here's the last key takeaway for today. So as Tanel pointed out, we are in a crisis at the moment, but crises have two sides. There are downsides, but as well, there are opportunities. So that was it for today. Thank you so much for listening. It really means a lot to me. Make sure you subscribe in Apple Podcast. And of course, please do not hesitate to contact me. If you have any questions or feedback, send me an email, john@johnnytalks.com, or connect through social media at Johnny Talks on Facebook, Twitter, and Instagram. And amigos, once more, thanks so much for listening, and I'll speak to you next time.